Hi guys. Hello, good afternoon everyone. Hi Kungil.
Hello.
Hi Lina and team. So we just wait for a couple of minutes and then we start. Okay, Kungil and Lina, thanks.
Sure.
Okay, I think we are now on time. Hi everyone. Good to see you and good to have a chat with you. Lina, Kungil, do you want to start up the meeting? Please.
Okay, sure. Good afternoon, analysts, fund managers, and bankers, and good morning to those of you in Europe. Welcome to the afternoon virtual chat with Thai Union Group CFO. Thank you for joining us today. Today, our key speakers will be Mr. Ludovic Garnier, Group CFO.
Hi everyone.
And Ms. Kanwali Thongsom-ang, Head of Investor Relations. And myself, Neroli Goldman from the Investor Relations team as the MC for today. The session will be approximately 1 hour with a presentation of 30 minutes, followed by a Q&A. If you would like to raise any inquiries, please feel free to submit your question in the chat box here, or you can unmute your microphone during the Q&A. However, just a gentle reminder to please mute your microphone during the presentation. Now, please allow me to pass the stage to Ms. Kanwali or Kungel to begin the presentation. Thank you.
Thank you, Lina. So, operation or financial performance in quarter. So, if we recap to 2020, we delivered strong profitability. So that driven by the ambient seafood and pet care business. And then in first quarter this year, we continue to deliver solid net profit growth that driven by the strong operating profit from all three key business. We have lower financial costs and also some FX gain. So without the exceptional sale first quarter last year, during the first wave of COVID-19, we report 77% year-on-year net profit growth in first quarter this year. And apart from that, our financial position remains strong. Our net debt to equity was lower 0.93 times as end of March this year. So we continue to have the debt ratio below 1 time. And we want to highlight on our top line that we continue to deliver revenue growth for 5 consecutive quarters. After the gross profit margin level that you can see on the green box, we have lift up our gross margin level. You can see 14 to 15% in 2017-18, lifted to like 17% in 2019, and roughly up to 18% last year. So this was not only because the external sale pushed during the COVID, but because of our strategy to focus on higher margin products and operate cost management. We still this year, let's recap on the first half. We still sorry for last year, we still see the strong the of frozen and pet care business, though we have some the normalization of ambient business in terms of the top line, but we can deliver good margins for first quarter this year. So thanks to our cost management program as well. So for the pet care value added, because of the strong demand and the new products that we launched, so with the innovation, so you can see we can deliver both on top line and the gross profit margin level. For frozen this year, of course, because of the retail and food sector services turnaround, so we expect a strong recovery both top line and margin. So next, Ludovic will present on our for the performance during the second quarter. So please,
Thanks a lot.
Ludovic, if you have any further comments on the financial performance that I have presented.
Thanks a lot, Kungel. And maybe let me start with this slide. Yes, if you remember, the one before, please. If you remember, in 2020, we did deliver a very strong performance, mostly thanks to the ambient performance. And here you can see the story and the growth that we have been delivering in 2020 versus 19. So the ambient and the pet care and value added were the two segments where we were delivering the most of the growth. And that's why in 2020, we have been delivering record high growth. And of course, there were several explanations for this. One of the explanations was, of course, the COVID-19 situation. And we know that especially in Q1 and Q2 2020, our sales benefited from pantry loading and panic buying in Europe and also in the US from the first wave of COVID-19. And then at the end of 2020, we said, okay, for 2021, we do expect some kind of normalization to happen in 2021 because we won't benefit anymore from this one-time benefit COVID-19 effect. However, we said we still expect some growth to happen in terms of top line. I will get back the guidance at the end, but we were expecting to deliver some growth in over the full year. In Q1 2021, you can see our top line was kind of flat compared to 2020, and that was expected. Q1 and Q3 last year, and maybe can you get back one slide before, please? I just want to show again Q1 and Q3 last year. You can see the sales line just below the bar chart. Q1 we delivered 5.9% growth, and then Q3 we delivered 9.3%. So if you look at 2020, Q1 and Q3 were really the two quarters where we are growing the most. And then Q2 and Q4, you can see we delivered 2.6 top line growth and 1.9. So here, what we said during our guidance for 21 was, okay, we do expect to have a small decline in Q1, but finally we make up and we managed to deliver the same performance than last year. And then Q2 and Q2 and Q4, we expect to deliver a strong growth on that. Okay, and here go to the next slide, please. The picture in Q1 21 was slightly different compared to 2020. Here you could see we have a kind of normalization of our ambient business, but then the recovery, which was expected in the frozen, was stronger compared to what we were expecting. Plus the pet care and value added and other products was still growing a lot. So here the story in Q1 has been changing compared to 2020. Now the ambient is kind of normalizing. That was expected. It's true that it may be a bit stronger compared to what we're expecting. But however, it is fully offset in Q1 by the frozen and chilled seafood recovery, very strong, especially in the US. It was a bit weaker in Asia. And the pet care and value-added business, you can see here the category. If you compare since Q1 2020, Q2 2020, and Q1 21, you can see here we have a constant and very steady growth, mostly coming from the pet care. We have also our packaging business, which is doing well, and we have also our value-added business, which is doing really well. So that was the story for Q1. Next. And now we start talking about the different topics which will impact your Q2. So here, just a quick update, of course, on COVID-19. You know this in Thailand, you are still very affected by the COVID-19 situation. For us, of course, the safety and the health of our employees remains for us a key priority. And we also want to make sure that we have a business continuity everywhere. So we did apply some measures everywhere. Now we have been facing with the COVID-19 issues since more than a year. And I think we believe we have some very strong measures in all our factories and also all our commercial operations in order to keep them open. Of course, you have some vaccination campaign going everywhere. You have different rhythm, very strong. It was very quick, for instance, in the US. And now it is moving in Europe. It is quite well advanced in Europe. But you have different level of maturity, and then now it's going on also in Thailand. It's a bit slower in Thailand, but it's growing. So everywhere we are kind of supporting and fully comply with the regulation. We try to really encourage our people in the factories to be vaccinated in order to be protected, because we believe this is the best protection against the virus. Of course, we continue to support the local communities, and we have one specific slide on this one. We have been doing a lot of donation in the past months in terms of human food, but also pet food. I'm sure you have seen some of this. We gave some money also to the hospital. We really try to really help all the local communities. We are fully aware that Thai Union is one of the rare business benefiting from this situation. So we really want to play a very large role and really want to support our communities. Logistics, I will get back to this. If you remember, we start to talk about the logistic cost issues since Q4 2020. At that time, we are talking already about the container shortage and the port congestions, mostly in the US. And at that time in Q1, in Q4, we said we expect this to continue over H1 2021. In Q1, we said the situation is continuing. The recovery is slower compared to our expectation, and now we do expect these logistic issues, and especially the container shortage and the port congestions, to continue until the end of the year in 2021. Of course, it did impact in our financial performance already in Q1. It will continue in Q2 and also in the year to go. The situation is improving, but this is really slow. The recovery, we're expecting a recovery to be much quicker. I think you are aware that in the US, you have a very strong recovery of the economics. So you have a very strong request for the containers in the US. And last but not the least, we have some new projects, and we mentioned already to you several times that we are building 2 new factories in Thailand. The first one is regarding our frozen business, where we are building a culinary facility where, in fact, we are consolidating 3 factories that we currently own. These one are a bit old, so we are concentrating all these 3 factories into one new brand factory. And the second one is a protein hydrolyzed and collagen factory that we are also building in Thailand. We expect the completion to happen in 2022. And we can talk again on this project again in the Q&A session if you have any question. Next slide, we just do a quick focus on SEC, and I'm sure you have read our news release regarding Songkhla canning, our operation. So here we are talking about operation in the south of Thailand. We have in this factory, we are producing some tuna cans and also some pet care. Okay, we have kind of the same activity than the one we have in Samut Sakhon, where we are producing a mix of tuna cans and tuna ambient products and also pet care business. So I'm sure you have heard that we have closed voluntarily this factory for 2 weeks by the end of June, and we just reopened since the beginning of this week. We had some cases of COVID-19, so in order to fix the issue, we decided to close voluntarily the factory there. Now we just reopen. We will reopen the factory gradually. We have a ramp-up curve planned over the next weeks and months, and we do expect it will take 1 to 2 months to get back to a normal production. In the meantime, we have been able to shift part of the production of this facility to other facilities in Thailand in Samut Sakhon plants. Just for you to keep in mind, just to give you an idea of the magnitude, Songkrak canning usually represents something around 5% of our Thai Union sales for a year. So here, closing for 2 weeks would be a marginal impact in our sales, less than 1%. Plus, we are owning some inventories, and we are able to shift part of the production to the other factories. So we don't expect any significant impact at this stage in our Q2 numbers. We may have a small impact in our Q3, but we don't expect for the time being this one to be a very material in Q3. Of course, we have taken and we are applying some very stringent health and safety measures. We want to avoid absolutely contamination, and the key priority for our people there is to make sure that our workers are operating in very safe conditions. This is for us one of the key mantra. This is not a new topic. I think until now, Songkrak canning was kind of preserved for the COVID-19 wave. If you remember well, we had a lot of COVID-19 cases happening in the Samut Sakhon region in December and beginning of the quarter of Q1. We fixed the issue. Now the situation has really improved in Samut Sakhon, and the factories are running normally. Okay, now it's spreading to Songkrak canning. So we have been closing again the factory for 2 weeks, but now we are reopening again, and we will restart the production to normal rate very soon. Next slide. Sorry, it's a bit slow. Yeah, just a quick focus. I will be quick on this one, but we just wanted to show you the way we have been supporting all the local communities around the world. And you can see here, basically, we have been donating mostly some products, some canned products everywhere. You can see a lot of them happening in the US. The Chicken of the Sea, we have been donating more than 2 million servings. We have been donating a lot also in Thailand and also in Europe. So in every country, we really try to support the operation. At the beginning, where everyone was missing some mask, we did provide some mask because, of course, this is part of our day-to-day life in our operations. We are wearing some mask. At the beginning, we gave some mask on this, so we gave some protection clauses, and we are willing to continue. So we want to continue supporting the local communities everywhere by donating some food on some protection mask. I think it's very important for us to show the support from Thai Union everywhere where we are operating. Next. Just a quick focus on Red Lobster, and you know that Red Lobster, one of our key businesses impacted by the COVID-19 in 2020. At that time, especially in end of Q1 and beginning of Q2 2020, they had to close almost all their restaurants in March, April 2020. So of course, if you get back to the share of loss generated by Red Lobster, it was kind of huge in Q2 2020. But we told you that we have been working very hard with the team. The situation has been improving in 21. If you remember, in Q1 21, they were generated a profit, which was really good. We told you that Q1 is historically one of the best quarter for Red Lobster, because this is the land period in the US where many people will go to the seafood restaurants, and the situation is still good there. Okay, initially we told you in Q4 2020 that the target for Red Lobster was to decrease the losses by half in 21 compared to 2020. However, in Q1 21 we did much better compared to what we were expecting, and now I think we are much more positive for the outlook of Red Lobster for 2021. I think we still do expect to generate a loss over the whole year. However, the loss will be much better and much lower compared to the one we were targeting at the beginning of the year. Just some quick insight on the operations at Red Lobster. We have announced last week or 2 weeks ago that the current CEO of Red Lobster, Kim Laudrup, will retire, and we just announced a few days ago that he will be replaced by Kelly Vellard. We are very happy she's joining the team. She has a very strong experience in Black Box company and also in the chain of restaurants. She has been leading the chain of restaurant Chili's in the US for many years. I think it will be effective beginning of August. She will join us, and she will be part of the board, of course, of Red Lobster. Again, welcome welcome to Kelly, and very pleased to have her on board. Regarding the outlets, I'm sure you follow the situation in the US, but the vaccination campaign has been very successful, and gradually we can improve and open more and more of the restaurants. So in Q2, in mid-June, 97% of the restaurants are now open for the dining halls, which is a huge improvement compared to Q2 2020. We still have some restrictions on the capacity, but this is reopening everywhere, and of course it's very helpful for us. It has also some impact. It means that we need to grow the numbers of managers and the numbers of workers in every restaurant, but this is very positive, of course, for our business, and we are looking forward for the move to 100% of the capacity. In Q2, we had two special days, Mother's Day and Father's Day in the US, where these are very significant events for Red Lobster in the US, because many families take the opportunities of this celebration to go to the restaurants, and we did quite well, and we drove a lot of very good traffic at that time. So we were very pleased with the execution of the Mother's and Father's Day in Q2 21. If you remember, we told you that last year Mother's Day was kind of a challenge in terms of operation for Red Lobster. There were a lot of queue in the restaurant, so the execution of these events in the US was not that great in 2020, in Q2 2020. So we really put a lot of focus in Q2 21 to improve, and I think we did much better. And the traffic was really good also in Q2 21. We continue to push also the off-premise business. We told you that was one of the key success for the new Red Lobster. It keep growing, of course. The percentage of off-premise is decreasing a bit compared to end of 2020 or Q1 21, because now the dining halls are opening again. So the proportion is mechanically decreasing on this one. I think we did launch a new menu. This is really good, and for those, maybe if we have some people in the US, maybe not a lot because of the time, but if we have some people in the US, I really encourage you to go to Red Lobster. We have been reworking completely on the menu, and the idea is to be able to propose some very healthy and very affordable meals to our consumers. And I think we did really well. You have some examples here, or you can go to a Red Lobster website to see what are they. But we have been working very closely with them and also with some third party in order to make sure that when the people get back to the restaurants, they can find really something they are looking for. And we can see that with the COVID-19, some priorities have changed, and more consumers and customers are looking for healthy options and also very affordable options. We know that many people, especially in the US, have been suffering from the economic crisis, and many of them lost their job. So now you have really a focus on healthy and also very affordable products. So that's why we have been changing our menu in order to be able to meet with this kind of expectation. Also, one of the key change coming from the COVID-19 and Red Lobster was a shift in our marketing expenses from broadcast TV to really digital internet expenses. So the shift is really important. I don't think we get back to focusing a lot on the TV, on broadcast TV, and I think many players did the same shift. More and more, we want to insist on everything we see digital, on the internet, and really want to focus on what is really driving the audience. So we have been working with a new marketing agency there, and we are really pleased with the first results we get from them. Of course, the vaccination campaign is continuing in the US, and we are looking forward for, again, some improvement of the situation. We told you already at the end of Q1 that we were seeing new customers, or customers we haven't seen since quite a while, especially old people getting back to the restaurant, and the situation is continuing, and the people are more and more confident in getting out. Of course, we need to follow carefully the situation. You know, the situation of COVID-19 around the world is very dynamic. We have all these variants which are impacting us. I think for the timing in the US, they don't have a lot, but in Thailand or in Europe, we start having more and more Delta variants. So we need to follow the situation very carefully. However, the trend right now is really positive. Of course, all of these good news, they have one impact, which is we need to increase our number of workers and managers. And if you remember, when we closed all our restaurants in 2020. Of course, that was one of the moves we did at that time. We reduced considerably the number of workers and managers in the restaurant. Now that we are opening again and that the restrictions are lifted, then we need to hire a lot of people. And you can see here, since Jan 2021, we hired roughly 20,000 people. So it's a huge number for Red Lobster, of course. And I'm sure you have heard that there is a very high competition on these employees, because all the whole restaurant industry is benefiting from this positive momentum. So right now we are competing with all the other chain of restaurants in order to attract them in our restaurants. Keep in mind also that the US administration is money, even if it is reducing right now. They have been producing free money to many people. And of course, it was not very encouraging for them to get back to the restaurants. But we are really working very hard on how to attract and to retain them. It means also that in terms of training, we have to train all these people, all the new managers, all the new workers. So right now we are really investing because we want to make sure that the new workers and the new managers, they will be efficient from the beginning. And we really want to make sure that the experience from the people who get back to the restaurants is really good, because we don't want them to get back only once, but we want them to get back 2, 3, 4 times, 10 times if you want per year. Next. Next slide. Lina, for me, it's still on the Red Lobster, huh?
It have changed to the next one. Have you seen?
Oh, for Botany, I'm still on Red Lobster, but that's fine. I think it's okay. So which slide are you right now, Kungel? Because for me, it's frozen on the Red Lobster one.
Yeah, on the Rugenfish.
Okay, the Rugenfish one. So here, the Rugenfish one, I'm sure you have seen here the press release that we did on this one. We did announce the acquisition of the remaining 49% of the shares of Rugenfish. If you remember, we bought back in 2016 51% of Rugenfish in Germany. So Rugenfish in Germany is producing mostly some ambient and chilled products. And since the beginning, since 2016, we were having a put and call options for the remaining 49%. The other shareholders was a family business. They were the historical shareholder of Rugenfish. And then we had a 5 years put and call options at that time. In 2021, it was the last year for them to exercise their option, and they did decide to sell the business. So we bought the business, and now we own 100% of the business of Rugenfish. The impact for us, of course, we were already consolidating them since quite a while, since 2016. So we already took all the sales and all the gross profit and all the OP from Rugenfish, but then the net profit was allocated between the group, between us, Thai Union, and also between the minority report. So the key impact starting from May, we won't allocate any more of the net income to the minority, and we will keep 100% of the net income to us. And you can see here some pictures within the Rugenfish group. We have different brands: Rugenfish, Harvesta, Ostifish, and Liesel. Are focusing on one region of Germany, specific products. Rugenfish is also doing a lot of OEM business on this one. Just to give you an idea of the size of Rugenfish, they have been generating revenues around 140 million euro a year. Next. Just tell me, Kungel, huh, when you move to the next one, because for me, I'm still on the Rugenfish one. Say it again.
Now you're on the CVC fund slide.
Okay. I don't know why, but for me, it's a bit slower. That's fine. So CVC, just to give you a quick update, if you remember 2 years ago, 2019, we said we will invest $30 million in different food tech startup around the world. Last year in 2020, we did invest in 5 different one. Now in 2020, we did 3 new investments. And you can see here all the areas where we have been working on. The last one, two last one we just announced, where the first one was a company called Via Aqua. This is a company from Israel focusing on biotechnology, and they want to improve everything on the animal health, and they want to prevent the disease in everywhere. And the last one we just announced yesterday, maybe you saw this one, was related to Alep Farm, which is focusing also on the meat from cell generated products. Kind of the same at Blue Nalu, but Blue Nalu is focusing on the seafood products, while Alep Farm is focusing on the meat products. Very happy to take part to this company. This is quite a large one. I'm sure you've heard about this one. Alep is one of the leading companies in this business. It's not exactly in our core business, because for the first time we go out from the seafood. We had already in the past in the some investments in the insect farm and stuff like this. Here, this is the first time we go to the meat, the meat coming from the cell-based products. So we go a bit outside of our core business, but we believe this is really promising, and we believe really Alep Farm is one of the very strong investments, and that's why we have been investing. If you read yesterday or today the press release on them, I think they did a capital increase of more than $100 million. So it's a very large one and very promising, and we really want to increase our collaboration with this one and with all the different investments we have been doing. Next, and Kungail, tell me the next one you can see. Sorry, I'm still on the Rugenfish one. Huh?
Now it's in the alternative protein. Have you?
Okay. 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 Alternative protein one. Here, if you remember, we did some communication already in Q4 2020 and in Q1 21, where we said, okay, we are launching our new brand, OMG. If you remember, that was last quarter. So we want to really develop. We start from a very low level, so I just want to manage a bit the expectation. We have been doing some alternative protein OEM since quite a while for customers in Europe and especially in the UK. But now we really want to scale up this initiative. We want to grow in this one. We are looking for partners, some OEM customers and partners across the value chain. It can be in the sourcing for raw materials, for the manufacturing, for branding. We have a new head of alternative protein. His name is Martin. I think this is the guy you can see on the left on the picture. He's Dutch and he has quite a strong experience in this business, and we are very happy about this one. We have signed, just to give you an example, we have signed one MOU with VFood in Thailand, and where we want to collaborate with them and see how we can grow further in this one. Of course, we keep in mind our CVC. Alternative protein is one of the areas where we want to grow with our CVC fund. Next.
Now we are on the sea
Kungail, tell
change.
me once. Okay, the sea change one, and sorry for that. I don't know why it's a bit slower for me. Maybe my connection is not great. Sea change one. So we have released the 8th sustainability report in May. I really encourage you to go through this one. You can download the report from our Thai Union website. This is very interesting, and you know, guys, that we have been investing a lot in terms of time, in terms of money, in terms of people, and efforts. We have changed many operations. I think if you go through this report, then you will be able to have kind of overview, because very often we will tell you, okay, we are doing this piece, or we are trying to improve that piece. With this report, you have really an overview, and you can see we have been doing really a lot. You know, we have a lot of recognition, and you can see that Darian, our head of sustainability, was again recognized as one of the top 10 business leaders for her work, which is really good. But this is a very interesting read for you. Very often we try to communicate some piece here and there, but with this report, you have really one exhaustive and overall view on all the key topics. And you know that now sustainability is one of our key factor of success. I think it's a very clear differentiation compared to our competitors, and I encourage you to go through. Next.
Now we are on the 2021 guidance.
Right. So the guidance. So if you remember, at the end of 2020, we told you the guidance for the sales. We were targeting a 3 to 5% year-on-year gross profit margin of 17%, SG&A between 11 to 12, interest rates quite consistent with 2020, capex from 6 to 6.5, and dividend policy consistent with what we have been doing before at 50% payout ratio. So here what we can say is in Q2 we do expect to confirm our guidance for 2021 on the sales for sure. The gross profit margin in Q1, the actual one was a bit higher. So we are quite confident for our 17% over the whole year. We may be a bit higher. SG&A between 11 to 12. I think this is fine. I think there is only maybe one, the capex one. We have quite a large project happening in 2021, and we are planning 6 to 6.5. Maybe on this one we could be a bit lower. Let's see where do we stand in Q2. Of course, you know that we are not expecting the COVID-19 to continue for the whole year 2021. Now it seems to be the case. I'm sure you have seen that in Thailand, especially, we were requested to just stop for 2 weeks all the buildings projects, and of course we have our new culinary and our new protein factory. We have 2 weeks of delay. We will see going forward if we can catch up, but for sure I think we may have a bit of savings and we will maybe spend a bit less compared to the 6 to 6.5 billion baht we were expecting initially. Next slide, just a quick focus on the strategy until 2025. Now we're insisting on the healthy living and healthy oceans. I remind you that we have a target of EBITDA for 2025, which is a range between $450 to $550 million. We want to commit on the innovation, and we have 4 key pillars. Okay, the first one is really our core business. The core business is really here the ambient and the frozen businesses. We want to continue in this one. I think the 2020 year showed us that we have some very good outcome on this one, and we can really optimize this core business. We don't give up. We want to push further. We want to innovate in this core business, and we want to make it even stronger. But we have also some new value enhancing businesses. And if you remember in Q4 and in Q1, we told you that pet care, the feed business, the supplement, the ingredients, all of these territories were kind of new for us, not new because the pet care business, we are quite strong already, but really want to grow. And these are the factors where we want to grow in the future. Sustainability, I talked a bit on this one. We want to continue to lead the industry. The last one, we want to continue some value accretive strategic investments. And at that time, we talk about Avanti, our partner in India, and also our partnership in Red Lobster. We want to continue doing these kind of investments, and we are really open for joint ventures or partnership like this one. I think we are at the end of the presentation. Sorry, maybe I was a bit longer compared to expected, but I think it was important to be as detailed as possible. Now, shall we move to the Q&A session? Khun Gail and Lina, please.
Yes, thank you, Khun Ludo and Khun Gail, for the presentation. Now we would like to open the floor for Q&A. Once again, please feel free to submit any inquiries you may have in the chat box, or if you would like to unmute your microphone, please feel free to do so now. Thanks.
Maybe we start with the first question on the chat. Maybe Lina, you want to read it, or shall I go through straight to the answer?
Khun Gail, would you like to raise the questions?
Yeah, sure. Yeah. So that's a question on the Songkhla canning. That's the big production base for the pet care. And the concern, if we not can quickly resume the operation like Samut Sakhon, how would you foresee the impact of the situation in third quarter?
So you're right. I think in Songkhla we have a big pet care operation. We have also a very large one in Samut Sakhon. Just to explain to you, so the pet care activity are really split between our factory in Songkhla and also our factory in Samut Sakhon. So of course we would have preferred to keep the factory open, but I think it was a very reasonable and very cautious decision to voluntarily close our operation there. So yes, of course it's a challenge, but keep in mind 2 things. First of all, we have our level of inventories. So we have some inventories, and we are able to source and to provide some product to our customers, even if we don't produce for a bit of time. So this is the first answer. The second answer is we are able to increase our capacity in our Samut facility. And this is, I think, one of the strengths of our business. And we did the opposite. In fact, when there was a COVID-19 outbreak in Samut, we did increase the production in Songkhla Canning. In Q2, honestly, I don't expect a lot of impact. If you remember, it happened just at the end of Q2, so it will be very small. We may have an impact in Q3, but I think really do believe we can manage this one. Of course, it will depend on the ramp up and on the regulation. We want to fully comply with the regulation. So we follow them, and sometimes the regulation is changing. We told you that the factory has been reopening on Monday. We start with the end of the process or the packing stuff and things like this. And then we have kind of a ramp up where we say, okay, in July, we will increase a bit the production, and then in August, we will increase again. And then by the end of August or September, we will get back to a normal production facility. So I think we can manage. We have been facing already this situation. We never closed at all in Samut Sakhon, but we closed already one factory in Ghana last year. And we were able to produce some of the product in the other European factories. So I think this is one of our strengths, to have a network of different facilities, and we are able to absorb this kind of change.
Yes, thank you. For the next question from Kumaria, can you explain more about the products price trend in Europe and in the US for the ambient business?
So here, of course, the situation is difficult to give a global answer, because the situation will be mostly specific by market. Of course, what the people will see, or the buyers will buy, and the retailers, they will be the fish price. This is a public information. You have the spot price, and the spot price was under control. There was no significant price decrease or increase in Q2. So we have kind of a flat price. Now the price to the retailer will depend by region. In some countries, like in my country, in France, it will be a yearly price. So you don't have a lot of changes happening every quarter. The price is kind of flat. We can influence a bit the price to the consumer by playing with the level of promotion. But right now we don't have any significant change, because the fish price is kind of flat. Of course, you know that we are facing right now some inflation regarding the price of the can, aluminium, and the steel cans and stuff like this. So we do expect some kind of inflation to come in the next quarters and years, and year 2022 from this one. But right now there was no very large change happening in the ambient product in Europe and in the US. It's a watch out for us for Q3 and Q4. We are kind of hedged already for some part of the world on the can, but we are facing some inflation, so very strong inflation for all for some packaging, and of course we are facing also the increase of the logistic cost everywhere. However, we did show you and we did demonstrate it in Q1. We were able to cope with this one, but it's a watch out, and it's one thing to pay attention with for the next quarters.
Next, can you talk more about the outlook of the ambient business and also the frozen business in second quarter?
Sure. So if I get back maybe to Q1, the situation in Q1 first, the ambient was kind of normalizing. So Q1, the ambient was declining quite strongly compared to 2020, and the frozen was recovering in Q2. We do expect the same situation to kind of happen in Q2. The ambient will continue to normalize. The ambient sales were very strong in Q2 2020. The opposite, the frozen sales were quite kind of weak in Q2 2020. So we do expect a strong recovery to happen in Q2. So kind of the same picture that the one we could see, and the pet care and value added will continue also. So kind of the same situation we do expect to see that in Q1.
Okay. And next is on the change in the tax regime following the G7 agreement. How would this affect on Thai Union operation?
So this we follow up, send and you. We read what we have in newspapers. I think we need to look into the details because I've seen some threshold where it will be only related maybe to some corporate companies more than $20 billion revenue, which is not our case. So I don't know yet if it will affect us or not. So we need to see on the details and the application how is it implemented. Okay, at this stage for 21, we don't expect any impact coming from that. Just for you to keep in mind, we fully comply everywhere with the local tax regulation. If there is any change to be implemented, then of course we will fully apply for this one. But for the timing, for the very short term, we don't see any impact. Not sure yet that we will be impacted by this, but we follow up. Okay, we need to have a bit of more details, and keep in mind that also between this kind of decision to the local application, it may take a bit of time. Even if I was personally very impressed with how quick they could get to such an agreement. I think the change of president, of course, in the US is playing a big role on this one. Now we need to see the timing. When does it apply for real? And then all the details.
The further questions regarding the tax, any countries that we opting that have the tax rate is less than 15%.
I think in most of our countries, we have some tax rates which are above. Of course, you know, the US and in Europe, we are above compared to this one. We may have some challenges in some specific countries, like Ghana, Seychelles, or even Thailand, where in these countries we are benefiting because we are exporting from this country. So we are benefiting from lower tax rate in these countries. Okay. However, keep in mind that from what I read, it would be the overall approach. So it would be kind of an average between the countries in Europe where the tax rates can be between 25, 33%, the US where it is around 25%, and those other countries where we are benefiting from lower tax rates thanks to the export activity. Okay, so right now we don't have all the details. Yes, we have some few countries where the tax rate, mostly in our production base, like in Ghana, Seychelles, or even in Thailand, are lower. But we need to see the correct application and how does it work from from that point of view.
Thank you. On the next question is on the can cost and the logistic cost that increased a lot in second quarter. How much would you expect to affect our SG&A expense in second quarter?
I think these are good questions. Yes, indeed, we see more and more pressure coming from our suppliers in can and for the overall packaging to increase the prices. I think there is more and more tension on this one. Keep in mind a few things. First of all, depending on the country, sometimes in certain location we have some yearly price agreement. So on this one, it means that we are kind of protected for 21. We can do also a bit of hedging, also to protect ourselves for this one. But however, it's true that we are seeing the pressure growing a lot. I think in Q2, we won't see a lot of impact coming from this. But again, I told you this is a watch out for us for Q3, Q4, and mostly for 2022. Indeed, when we have to negotiate the new prices for the packaging, we do expect to see some inflation to apply, and then we will find some way to pass through or to increase our efficiency in order to absorb part of this inflation. But clearly, this is one of the very strong watch out that we have for the year to go. But for Q2 21, I'm not sure we'll be very much impacted coming from that. Logistic cost is a different story. We told you in Q1 we were estimated at that time the impact to be between 200 to 250 million baht, if I'm not wrong. We did not yet do all the calculation and the estimation for Q2, but I would expect to be roughly the same range. Keep in mind that even if we say this is our impact in terms of SG&A, we managed to pass through some of these costs to our suppliers, to our consumers, to the supply chain. And of course, this is our role where we need to try to find a way to offset all these changes. So yes, we'll be impacted again in Q2. And again, I think in Q3 and in Q4, now all our opcos are saying we do expect the situation to last until the end of 2021. The situation is improving again, but it's very gradual. It's very slow. Okay, so we do expect to still be impacted by this logistic cost increase until the end of 2021.
Next question regarding the cost. Is it the oil is a big part of the operational cost?
Sorry, I missed the question. Can you repeat again, good girl?
Um,
You were breaking up.
regarding the oil, is this a big part of our operational cost?
Oh, it is one of our ingredients. I think depending on the countries, some countries like Italy, for instance, almost all the products are with oil. So yes, for Italy, it can be a significant impact. It's olive oil, it's sunflower oil, and stuff like this. Again, on this part, we have sometimes some yearly agreement on some hedging, which are here to protect us. Some other countries, like the UK or like in the US, they don't eat a lot of product with oil. Okay, so it really depends by country. Yes, this is one of our significant ingredients, not the key one, but yet we are exposed on this one.
Okay. Next is on the Red Lobster. Do you see any like impact from the higher staff costs versus rate ratio in second quarter compared to first quarter of this year?
Yes, I told you that right now we are hiring many people. We are moving initially before the COVID-19, just to give you an idea. Before the COVID-19, we were operating with an average of 4 managers by restaurants. And then in 2020, we moved down to two. Two because, of course, many restaurants were closed and the working hours were much smaller compared to before. Now we want to get back to very close to 3 managers by restaurants, and we are hiring a lot of workers because the working hours are reopening again in the US. So yes, indeed, we do expect to see the staff cost per sales to increase. It's a bit difficult to compare Q2 to Q1 because we are hiring a lot of people right now. And this is really what we want to do. We need to increase our numbers of workers and managers in the restaurants. Something which is really key for us is we want to make sure that the people getting back to the restaurant, they are really enjoying and they have a very good experience. Okay, we don't want them to wait for a long while. We want them to receive the food quite quickly and we want them to be happy. So the satisfaction criteria is for us really key. And that's why we are really willing to invest in our workers and staff. And yes, I think in the short term, it will impact the P&L of Red Lobster. However, we do believe that it will help us also to grow our top line because we do believe the top line to really grow in the next month. This is one of the key challenge and also opportunity we have at Red Lobster. This is not only applicable to us. I think the whole industry is facing with this challenge. And again, I told you that we are facing a very high competition right now in the US to get the workers, to get some restaurant managers. So working very hard on that. You could see maybe that McDonald's has been paying some incentives. I think it was $50 for the workers, for any workers being hired within their restaurant. So depending on the states, the situation is different. So you may have more pressure in some states compared to some others, but we are really willing to attract them. And of course, very high competition to attract them. But this is key for Red Lobster to increase the numbers of workers and managers everywhere. So yes, it will increase, but I think it will be supported and it will be offset by the increase of the top line. So overall, we are looking for an improvement of on the Red Lobster financial performance.
Okay. Thank you. If no further questions, Ludo, would you like to leave any final messages or key takeaways to our investors before we end the session?
No, I think we told you 2020 was for us an exceptional year, and we all were aware that 2020 was exceptional, and we had many positive but also negative challenges. And the ambient and pet care were really very strong in 2020, but the frozen business was really suffering in 2020. And at the end of 2020, we told you we are very confident for 21 because we had many questions regarding is your performance sustainable for 21? And I think with our guidance, we were having and we are planning to deliver some quite ambitious target for 2021. Q1, I think the momentum was really good. Top line, gross profit margin, OP, and net income. We are very pleased with Q1. We do expect the momentum to remain very strong also in Q2. We told you we are very confident with our business. We have a kind of unique portfolio when depending on the year, the ambient or the frozen or the pet care and value added they will offset, but overall we are looking for net growth, of course, on that. But I think thanks to our unique portfolio and the fact that we are also in the key regions of the world, in the US, in Europe, and in Asia, with a quite well balanced portfolio, I think we have a unique positioning, and that's why we are very confident for 2021. Of course, we have some challenges ahead of us. Red Lobster, we are still planning to generate a loss over the whole year, but the situation is really improving dramatically in this one. And we have also some other challenges, but I think we have some in a very good position, and the momentum is strong and will continue to be strong in Q2 21.
Okay, thank
Lina,
you.
Gail.
Thank you very much, Ludo. That concludes the afternoon virtual chat with Thai Union Group CFO session for today. If you have any further inquiries, please feel free to contact the investor relations team. For those of us in Thailand, I hope that you and your families are keeping safe and healthy during this time. Thank you, Kun Ludo and Kun Gail, for hosting this session. And thank you very much to our participants for joining. We hope to see you again soon. Have a pleasant day. Thank you.
Thanks a lot to everyone,
Thank
and stay
you.
safe. Okay, looking forward for the improvement of the situation in Thailand. Stay safe all. Thanks. See you.
Thank you. Bye-bye.
Bye bye.